Welcome back, everyone. In this video, we're going to discuss how to use options flow data, specifically from unusual whales, in addition to charting data, which you can get from any brokerage, to understand the direction of the market and specifically to understand when you can time the market to have successful trades. So, without further ado, let's get right into it. Now, before we start with the specifics here, I want to talk about the overarching theme of what we're going to discuss. And this is really important. As most of you know, trading can be very difficult in terms of letting your winners run, having more winners than losers. And most people who don't find success with trading, it's not because they don't get some winners. It's just because they lose more frequently. When they lose, it's bigger. Well, when you trade also matters. There are times when a lot of seasoned traders won't trade. I specifically myself, as most of you know if you've been following me, became a professional trader, a licensed trader in 2005, as well as an options and derivatives licensed specialist. And there are days when I won't trade. If you follow me on Twitter, when I have my daily callouts and watch lists, I announce that on some days, market data is not sufficient for trading. Now, I understand that it can be deceiving because you see some people calling out trades like it's a quota. It usually is because they don't want to disappoint followers, and there's different incentives for calling out every day. That's just not the way that the market works. Sometimes there's not a good setup, there's not a good opportunity. And you actually are practicing something that is better by not trading at all, and that's risk mitigation. People who tend to not be successful don't have good risk mitigation. So trade when the markets are working in your favor, and don't trade when it's too complex or you just can't find the right opportunities. And we're going to talk about that because that's what hurts people the most. We know when we're on a bull run, we know when we're on a bearish pullback, or most people do. But it's the times when you just shouldn't trade. So let's look at some data here. And what I've pulled up just for demonstration purposes, and this from March 10th on AMD. As you all know, the markets have been erratic lately. So if you have been struggling in the markets, take it from me, a seasoned trader. You know, that's 17 years ago is when I got my license and became a professional. I was trading before that. I will tell you that these have been challenging conditions. Specifically, I would say the last 3 to 4 weeks have been a little bit more difficult. And I have a lot of peers and colleagues in the industry who are professionals. Some work on Wall Street, some who work off of Wall Street, some are just very successful traders. A lot of them have pulled back and not traded very much at all. So you're not alone if you think it's been a little bit tricky lately. But how do you understand when you should pull back and when things are a little bit difficult? Well, let's bring in unusual whales. You know that the way that I work, there's no dogma. I'm not technical analyst guy for life, or only use the flow, or only use fundamental data. I think that's terrible. It's not a game. It's not a sport. You shouldn't have some sort of conviction or allegiance to an ideology, right? We don't have to become zealots. The only thing that you're in pursuit of is being successful, being profitable. You want to build wealth, not join teams and wear a t-shirt that says, I perform this kind of analysis. So I use multiple data points, right? And I allocate weight differently based on what is sending me more clear signals. So when I use the options flow data, and this was on March 10th, I'm looking through, and what I see here is mixed data. I see that we don't have too many near-term expirations, right? So no one's really comfortable with taking on any options contracts of significant size for that week. What does that tell me? That tells me they feel a little bit uncertain during the week. They're kicking out their expiration dates because they need a little bit more time to see how things play out. There's obviously other reasons as well, but when I see that as being consistent, you know, we just don't see too many here, right? We should be seeing some March 11th, and as you scroll down, you can maybe see a couple, but they're really kicking out. Now, this is later in the week, but again, normally for a company like AMD, we would be seeing more end of the week expirations. Then when we do look at the premiums, it's a complete mixed bag, right? This isn't overwhelmingly bearish. This isn't overwhelmingly bullish. Even at certain moments of the day, I'm not seeing a lot. And if you look at how AMD behaved during that day, it was very up and down, it's erratic. You know, what we're seeing a lot, we're seeing sell-offs followed by rallies later in the day or continued sell-offs. I call this mixed data, right? Without delving deeper. If you're just taking a cursory view and you find it overwhelming to get too deep into all the details, what I see here, this is mixed. And I'm sure you're just looking at it yourself. Even if you didn't know anything about options, you just looked at these colors and the numbers and the premium, you'd say, yeah, it kind of goes back and forth. Right, that's mixed data, right? And then we look at the expiration dates, and you get a little bit more when you start to delve in. You look at the strike prices, but essentially here, there's just not a lot of conviction. right? So if you're thinking from an institution standpoint, that's how I try to explain and teach people. If you want to be able to follow and kind of catch a ride on the wave, you're trying to think the way the institutions do. Number one to institutions and to whales and large players is always risk mitigation. I know that's not what you hear from the random guy who's all about the YOLO trading. Professionals don't do that. That's just not the way it works, right? Because you're not concerned with getting rich tomorrow and I took $100 into a milli on the week. Ignore that sort of thing. Tune out that noise. Those people are just looking to promote themselves. If you lose your money, you lose everything you have, no one will care. Those kind of people, they won't care, right? Look out for yourself. Behave like a professional. Risk mitigation is number one to large institutions and to whales, right? So what they're doing here is they're saying the messaging that I'm getting, and again, I paint a bigger picture, but in this picture, I'm seeing we're not sure. These markets are uncertain. There's not a lot of conviction to anything that we're doing. And I assume that there's more hedge plays in those scenarios because now I see that you're not convicted. So what are you doing? You're taking small moves because you're saying, I'm not really sure. I don't want to speculate. I'm not necessarily going for profits here, but I do want to protect myself from some losses. So I'm going to take certain specific positions to protect myself. And that is what happens. You hedge. So we see mixed data here and we know that it might not be good. Now, you wouldn't just look at AMD. I review, up to 100 tickers and I've explained my process. I go a little bit faster because I've reviewed some day over day and I do have some help from a team. But as you go through, if you just see more and more of what we're seeing with AMD here, that tells you that from an options flow standpoint, the major players who kind of know what they're doing as they manage billions of dollars. And I know it's tempting. You find the guy on Twitter or person on Twitter and they say they have the magic formula and they have a bunch of plays set up for you tomorrow. Look, I prefer to roll with the institutions, right? Having come from a professional background, having a history of success and being able to see through some of the nonsense, tune out the noise, like I said, because those people won't be there for you when you blow your account. Institutions are signaling that they are not certain. They're hedging positions. There's mixed data. They're sending a message, even though it's not intentional to send it to you. But the message is, we're not sure. We're not taking big risks. So then when you see that across the board on the options flow, you kind of have a bit of a message that the next day is going to be a little bit difficult, right? But how do we further cement that idea or get additional support? Because like I said, I like to look at multiple data points. Well, I'm going to pull up a chart here. Here we are. And so you can see the SPY on a daily basis, right? And where were we? We were on March 10th, right? Now, of course, keep in mind, March 10th to 11th, part of the reason you didn't see the big premiums is because it's next day, but typically we do see more. So remember, it has to be relative, right? On a Monday, you're going to see more for the end of the week. On a Friday, you're going to obviously see far less. So it has to be all relative. Just keep it in mind. But once you get an understanding for what the norm is and what you're used to seeing, you'll understand on a relative basis what doesn't make sense. But let's look here at the daily chart, right? So we see some sideways action. Obviously, the market has been in decline. This is a bear market, whether you want to call it a bear market, a stealth bear market, a surprise bear market. We're bearish right now, a bearish correction. You get the idea. But what do we see here? Right, I want to just focus on this day right here on March 10th, because I already left the options flow saying I've looked at a lot of tickers. This is what I'm seeing through my experience, through my knowledge, and I've explained to you what we're seeing and how you can look at it as well. Then I look at this day. What do I actually see here? Well, if you think of it from a narrow standpoint, you're going to say, what's wrong? I see a rally. We had a bullish rally, right? Like we opened and we closed higher, right? We kind of pulled back from this low and we broke up, a little bit higher, and it might even be a bullish pin bar for some of you who are into technical analysis. That's not what I see. That's not what professional trained eyes will see. Here's what I see. I see exactly what I found when I looked at the options flow. I see massive indecision. And I see weakness in the market. How do I see that? Well, let's look a little deeper. So if you see a bullish day, here's what I would say. This isn't bullish. This is where we closed the day before, right? We gapped down. And we barely made up what we lost on the gap down. So we ended up closing, what was it? 425.48, right? Well, what was the open the day before? 425.14. We're cents away from where we were the day before in the open. So the gap down can be confusing. but you didn't make up a lot of ground here, right? You barely finished where you started the day before. It just feels like it was a bullish rally because you saw it dip lower during the day and come back up. But on the whole, when you zoom out and you can see it on this sort of chart, that doesn't look that impressive anymore, right? On the day itself, sure, it looks like it's some kind of rally. And of course, we saw what happened the next day. What else do we see? Well, it's a gap down and a move back up, so it's only a recovery. It's only a recovery of losses. I don't look at a recovery of losses as bullish. Think about your portfolio. If you lost $2,000 and made it back, would you say, I'm on a big bull run? You've got some momentum. Sure, maybe, but you're not ahead. I wouldn't say you had this big bull run in your portfolio, but let's look a little bit deeper. What else do I see in terms of indecision? Because you might say, well, yeah, I get it, but isn't that decisive that we moved up? I mean, we made a clean move up. Look at the volume. I drew a price line right here on the volume to give you an idea. That was the lowest volume we'd seen on the market since February 16th, right? In almost a month. That was the least amount of volume. And if you look at it relative to all the other volume we've seen as of late, this is one of the lowest volume days that we've had. There's only 4 days since, what is this? Nearly 2 months ago when we've seen that little volume. So what does that tell me? Again, that reinforces the idea that I had, that I explained. I said I see low conviction here on the options flow. You'll hear me tweet about that as well, right? There's no hearsay with me. I'm not interested at all in the bravado, in having the cool guy tweet and getting followers and let's go, bro, we're gonna do it. I'm looking at this and saying, no, here's what I see. Matter of fact, there's less volume, there's indecision, the market hasn't taken a direction, institutions are not spending money, they're not committing to any options, they don't want anything near term. What does that tell you? All of it tells you indecision. Not committing, not a lot of volume. Not committing, not a lot of movement. Not committing, we didn't make much of a move since yesterday. Options flow, not committing. Now, are there other things that you can use to understand that maybe there's a change in the market? Yes. If there are big macroeconomic changes. Were there any? No. We still have the crisis in Russia and Ukraine, right? The conflict. That hasn't changed. At the very least, it remains volatile and something that we can't anticipate, right? So that's where it's been for the market. It's volatile. There's a conflict. We don't know what's coming next. Market doesn't like that. That remains the same. Some of the specifics might change. There might be a certain city where something's happened, or maybe some positives and there's discussions, but it's nothing substantive. Okay, what else? Do you have anything changing from a macroeconomic standpoint? Not at all. We're still facing inflation, right? In the numbers coming out. Inflation is still rampant. We're still facing tapering from the feds. They haven't made any big changes in that regard. There's no major changes to the supply chain. Everything is pretty much status quo in a place where the market's going sideways and there's heavy indecision. If nothing else, we look at the overall trend and I see weakness. So I see a weak market with low conviction. I see options flow with low conviction. What does this tell me? Bad time to trade. Be very specific. And on my callouts, I was very specific. I explained this and I said, look, we're having less callouts this week. There are less opportunities. I still found some. We had some for the Friday, and we were able to take advantage of some good opportunities, particularly to the insiders group. If you're part of my insiders group, I had a special email that went out. We took great advantage of Rivian, and it was a very specific trade. But as I detail in depth to my insiders, I'm sharing some data here as well. This isn't a good time to trade, right? You have to be hyper specific with your opportunities. If you're someone who just likes to flow with the market and say, look, I'm going to be a little bit more aggressive because the market's on a big bull run, it's a good time to trade, this is a terrible time. What you can do is you can have very hyper specific opportunities. And even those, what you'll notice with my watch list is I scratch them all the time, meaning I cancel trades. On Friday morning, I cancel trades. We only take those where we have opportunities. And some of them aren't even triggering. And that's because I actually care about protecting capital. It's my reputation. So I treat it's very easy for me to be honest with everybody because I care about my reputation, right? Being right and wrong makes a difference. I have my credibility as a professional. And I just explain to people the way I do for myself. That's the easiest principle that you could take. The old principle, treat people the way you treat yourself. It's just easy. I explain the way I'd explain it for myself. And I say, hey, look, I'm canceling this trade because I wouldn't take it as a professional. I'm speaking to others who work for institutions, others in the space who are professionals who have been for decades. They're backing off. probably a good idea to back off today. So that's how you're able to understand the conviction of the markets and a little bit more data on direction to have confidence. Does that mean there won't be a big change the next day? Well, no. Look, here's what we did. We gapped up this time and then we plummeted. So that can happen, but that's also very difficult to time because you see a gap up and you say, oh, bullish momentum, we're going to take off. No, we dropped. We not only gave up everything that we gapped, right? We actually finished lower than the low of the day before. So those are very difficult and erratic market conditions to trade in. Get an understanding of when you need to pull back. The best traders know when they need to pull back. It's not a casino. You don't need to be involved in this every day. You don't need to trade every day. I know some people say, I just want to make 500 a day. I just want to make X amount a day. Right. The market doesn't care. I'd rather say it that way than be the cheerleader who says, let's go, bro. We can do it. Oh, every day, just give it your all. No, the market doesn't care if you give it your all. Be smart about trading. Don't be the cool person. Don't be the person who has to trade every day. Be smart about it. These are not easy conditions to trade in. Big moves down, a huge day up. Then you gap up, or you think, oh, we're on a bull run. Oh no, well, we gap down. Look at the gap down. We finish here, and we start here, then we move up. We finish there, but then we gap down here, then we break down. And you'll see gaps and you'll see big moves in a normal run, but these have been erratic conditions. And again, I'm telling you that. It's coming from a professional. My colleagues tell me the same thing. My contacts have said the same thing. Anybody you listen to says the same thing other than someone who has a vested interest in watching you trade and burn through your money. So be careful. When you see the opposite, that's when you know exactly when to trade. And why do I start with when not to trade? Because risk mitigation first. And if you think that's not a sound principle, just think this way. If you took a look at your trading life and you just canceled off some of your biggest losers and your worst, poorest trades, where would you be? Almost every single one of you would be in a pretty good place. Guarantee you're in a better place because we just killed off your losers, right? Or some of your biggest losers and your worst losers. But for many of you, it's the complete difference. You just have one bad day. You have one bad trade that burns you for the month. And it's a turnaround. So we start by saying this is when you don't trade. If you're serious about trading and you're a serious person, you take it to heart and you know when not to trade. If you feel like you just need to trade because it's almost like a gambling itch, like it's something where you just got to be in the game, then you'll trade any day. You'll follow Furu XYZ's list because they have a list every day no matter what the market conditions are, which again is impossible because it just doesn't make any sense. Don't behave that way. Protect your capital. Do well. If you're interested in learning more, please follow me on Twitter. It's at profitstaken. And of course, you can go to profitstaken.com to join the insiders group where we have swing trades, deeper market analysis. I break this all down in written emails. We have inside ideas for underlying trades and a lot of other data. Plus, I offer one-on-one coaching if interested. So trade smart, review this. And if you're interested in signing up for Unusual Whales, which I can't forget because it's a great data source here, please see the description below as I have a coupon code and you can use that coupon when signing up. All right, guys, we'll see you soon.